sonar-like iceberg finder is a powerful indicator that detects whale footprints through hidden iceberg orders. It helps you identify sophisticated market traps and avoid getting caught in liquidity hunts like most traders. Quantum vol delta is an advanced order flow indicator, significantly enhanced compared to traditional volume delta. It provides real-time market pressure analysis, allowing traders to detect hidden buying and selling activity within each candlestick information that regular price charts fail to show. So how do they work together? First, we wait for an icy signal to appear. In this case, we have a bullish ice signal which acts as a hit bar confirming that it's time to prepare for an entry. Next, we see buying pressure appear right after that. This candlestick acts as a confirmation signal showing that buyers have stepped in, and this becomes our entry opportunity. This approach provides extra confirmation from volume, reducing false entries caused by weak buying or selling pressure that is insufficient to drive price movement. Conversely, in this scenario, we detect a bearish ice signal. However, we do not rush into a position immediately when the signal appears, because it is only an initial sign of potential seller activity. Instead, we wait for the next 1-2 candles to look for confirmation from quantum vol delta. If the delta volume shows clear selling pressure, that confirms that sellers are in control of the market, and this becomes a valid opportunity to enter a sell trade in alignment with bearish momentum. Conversely, there are situations like this. Right after a sell signal from the sonar-like iceberg finder, the price does not move downward as expected. Instead, it consolidates or even shows a slight upward reaction. At the same time, quantum vol delta displays a candle with significant buying pressure. This is a strong indication that the market is rejecting the bearish move and buyers are absorbing the sell orders. In this scenario, we should definitely avoid taking a sell entry, as the probability of a stop-loss hunt is very high. In the opposite scenario, suppose sonar-like iceberg finder generates a buy signal, indicating potential buyer activity. However, if the price does not rise afterward and instead hesitates or even gets pushed slightly lower, while quantum vol delta shows no buying pressure and instead reveals selling activity, then there is no valid confirmation for a long entry. When order flow disagrees with the ice signal, the setup becomes weak and unreliable. In this case, we should avoid taking a buy position and wait for a cleaner, higher probability opportunity. Now, let's move on to practical application and take a look at how these signals actually appear on the chart. Theory only becomes valuable when it can be applied effectively, so we will observe how sonar-like iceberg finder and quantum vol delta work together to generate high probability trading signals. Below are the settings for the two indicators we used in this strategy. These configurations are optimized for order flow analysis and for detecting real buying and selling pressure in the market. In this demonstration, we will be using the King Renko 10/10 chart. This chart type is chosen because it smooths price action, filters out market noise, and presents trend structure clearly compared to traditional candlestick charts. However, since both indicators rely on volume data, it is crucial to maintain a balanced Renko brick size. If the brick size is too large or inconsistent, volume readings will be distorted, resulting in inaccurate signals and reduced analytical effectiveness. At this point, we receive a buy signal from the sonar-like iceberg finder, indicating that significant buy orders are entering the market. Immediately after that, quantum vol delta confirms increasing buying pressure through a bullish delta candle. With both signals aligned, an iceberg buy signal and volume confirmation, this forms a valid trading setup and a reasonable opportunity to consider entering a buy position. Similarly, in this case, we have a sell signal from the sonar-like iceberg finder, indicating that strong selling activity has entered the market. At the same time, on the same signal candle, quantum vol delta confirms clear selling pressure, showing that order flow supports the bearish move. With both the iceberg signal and volume confirmation aligned, this setup meets all conditions for a valid sell entry in the direction of the bearish trend. At this point, a buy signal appears from iceberg, and it is confirmed by buying pressure right afterward. With both price action and volume aligned, this becomes a valid trading condition. Next, we can see a sell signal from ICE in this area. However, there is no follow-up selling pressure, but also no buying pressure either. This indicates that the market is currently in a balanced state after the iceberg signal. Since the next two candles show neutral delta with neither buying nor selling dominance, we can still consider entering a sell position here based on the initial icy signal. Here we see a buy signal from the iceberg indicator. But immediately after that, selling pressure appears. In this case, we do not enter a trade and avoid a false signal. So with that in mind, let's walk through how the signals work with this combination. Join the HelloWin Forum, where ninZaFamily traders come together to explore valuable trading knowledge and products. Click the link in the description to get started. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.